Good morning, everyone, and welcome to the European crossover webinar. And we just got data. I don't know if you have a Squawk service, you heard it over there, which is the market services final PMI came in at 30.5 for services with composite at 31.9, a little bit better than the two figures. And then Italian employment came in at 6.3%, which they were looking for a Reuters poll, 9.5%. So certainly better. We did get German numbers also. Market services PMI came in at 32.6, a little bit better. Composite also a little bit better, 32.3. German unemployment, 238,000 also. I've been obviously a little bit of a deviation there. Then we got also French PMI services came in a little bit better than expected. So we're seeing better than expected numbers across the board. Also Spanish services PMI. Now, last night or in Asia, depending on your time zone, we did get Australian data come in, and we did see and along with the real GDP, we did see a much even higher Aussie. Almost, if that's hard to believe, although that's what we've been seeing consistently, but we did see those higher numbers. We have seen the Aussie come off a little bit, came into some resistance. I posted a chart in the Asian session right before that data came out for what we had for our Asian, what we call Asian update. And it came pretty much, like I said, the market kind of stalled in that area, which was 69.75. Beyond that would have been 70.27. So we did go on and see the market. Now it's kind of seems to have slowed just a bit, and we're a bit off, not a whole lot, but we are off from those highs that we saw in Asia. So certainly the numbers have continued to push higher. As we come into the States, we are going to have ADP employment. It's going to come out. It looks like they're looking for a pretty good drop in here. And then we will have market final PMI services, as well as durable goods and factory orders. Then ISM manufacturing PMI, which will be key at 10 a.m. Eastern, along with new orders. So those will be key. That'll come out later on in the U.S. session. And we've also seen, just switching over to seeing if we had the morning bid story come out. That now comes out later. It used to have to come out so late. Has not come out yet. But anyway, we have seen the equities continue to move higher, which one of the things that we saw since yesterday, and I'm glad I didn't try and go or fight against that, is what we've been seeing every day is if you do get a dip, you get a dip in the early morning session. I mean, the early morning half, we might push a little bit higher, but if we make a low, we make a little bit lower low. I mean, at that time, and then we usually just the market goes bid, and certainly that's exactly what happened. And you can see right now, they're actually actually above this key 3086 area here, at least in the SPOOs. If we pull this back, right there, 3086. This is 3086 area here. You can see that right here, low, high. I mean, there's a little bit beyond that, but you can see here, low, high, go back again and challenge it, fall, rally back up. You can see the significance of this 3086. And we did take a punch above it, but fell back in and tested lower. We got above it, came back, a bit of a battle here. Then this is probably over a weekend gap or whatever, but we gap not a gap lower, but you can see the break right from the open and just come down. So you can see the significance of 3086 right here. And beyond that, if we were to jump up, I think it goes all the way up to what, 3107. 3107 is the next key area, but we see some, I mean, it even went up a little bit higher right there, which is 3117, but I'm just saying where you see some good volume here. So you can see the significance of 3086. One of the things I've taken to looking at now to kind of give me an idea of, are we seeing something that tells me, oh, I think it's supposed to be weaker? Because remember, different times, even last week, I'd say, okay, this part where now it's going to go on fade, not knowing, and the market may, weaken a little bit and then come right back up. And what I've done now is I try and keep an eye on some of the key indices, and that has helped me. It helped me yesterday because these were still holding up relatively well. So I said, hey, look, even though at the time the S&Ps were kind of vacillating a little bit between 3065 and let's say the upper 3050s, like 3059, like as if it was just on the edge, ready to tip over. And you were seeing that in the YM as well as to a certain extent the Nasdaq. But when I looked at some of these key indices, although you can see right here with the high yield, and obviously this has a lot to do with the Fed coming up and buying ETFs, but certainly looked like, okay, well, maybe we're going to finally start to tire out a little bit. Just looking at this on a 30-minute. But you can see here that it just it's gone and kept the bid right up in here. And we're seeing the thing with the financials too. Also, just one key stock kind of looking at is Home Depot. Look at that. We'll just continue to push higher. And then Nasdaq Technology, the banking index, and housing here. But there's nothing really that you could say, okay, and look at this, just up and away. Look at this. So how can you fade it? So that was one of the things that's kind of helped me is I'm thinking, when I see some weakness coming here, then I can step in, or not only weakness, but the market, I wouldn't say weakness, I see the market starting to stall and then start to see some follow through. You know what I mean? I'd say, okay, case in point would have been, although this is a 2 hour, I'd prefer to look at a 2 hour, but I'm saying, look at this 30-minute. If we'd seen this here on 2 hour and then stall, and then we start to see this market breaking towards the end of the day, okay, then I think, okay, I think there's something here. We may be able to break, but we're simply not seeing it. That's what I'm saying is, right here, like with the financials, you can see here, if they start to say, okay, well, now we start to break, now we're starting to break, then we can see that follow through. And the reason I think that that's key, and I was talking to, I think it was Greg yesterday, and I also, Jane, one of the reasons I'm looking at that, although I primarily just scalp, although I've probably got myself in a little bit of trouble trying to mini swing trade over the last week and a half or so. It's as opposed to just plain old scalping for keeping the the levels pretty tight. But one of the reasons I do that is because we've rallied over 300 handles in 3 weeks. Literally 300 handles, 300 plus handles. Actually now 320 handles over the, or actually almost I'm wrong, 330 handles over the past 3 weeks as of tomorrow. So if we do see a pullback, and if it is, or if we get to a point where it can be sustained, then yeah, we have a long way we could come off. And that's why I'm kind of keeping an eye on these. And one of the good things also is they're keeping me out of trouble from just stepping in and just willy-nilly just short it. Maybe not willy-nilly, but thinking, oh, there's all this unrest, it's now got to fall, which was my take to a certain extent. But these key indexes, sector indexes, are continuing to show strength. I mean, the key thing is not to just find one that's weakening, but one that has performed exceptionally well along with everything as this market has gone, and find those indices or sectors to start to stumble, start to stall and potentially stumble. Then I might have something, okay, okay, now I can take a short with some conviction as opposed to taking a short at a certain time of the day, especially later in the day, and then chewing on my nails, thinking, okay, I hope this is it. Well, then I can have some conviction. Say, oh yeah, you can see now high yield, stalled, a day ago, 2 days ago, and now it's really starting to crumble. Financials are starting to fall through. Then I feel like I have something, like I said, some meat on the bone. So that's kind of what's helped me here. It certainly saved my bacon yesterday. Um, a moment. We were really struggling in here yesterday, and yesterday we were really struggling right here, and it looked like we were going to break. It did. It looked like we were going to break, and then looked like, okay, now this thing is really. And I was seeing it not only with that, I was seeing it with the YM, the Dow futures, and to a certain extent the Nasdaq. They're all starting to weaken before the end of the day. Let's say coming into the last hour, and looking like, okay, this market looks like we may just break them here, and that's how the market was weakening. And then you could see them quickly hit some stops as we got into in the last hour, but well before the middle. And like, oh my God, all those people, now they just got run over. They got stopped out. And then, of course, you can see the rest of the time in Asia, we just kept going higher. And you would have thought, okay, here at 3086 are going to struggle. Oh, they did just a hair bit, like maybe all five handles. And here we are, we reclaimed 3086. So it's an area to focus in on. But the way this market, or YM, Nasdaq, whatever. But I'm just saying the way these markets have just been able to stay at these levels, you really have to see something in the plumbing, i.e., some of these sectors to show, and the ones that have been strong, to show them stalling and then beginning to weaken, to be able to say, now I can step in here. So anyway, I know it's got to be frustrating. It's been frustrating for me to trade some of these markets when I was trying to step in. If you're going to try and step in, time to step in is within the first half hour or hour of the cash equity open, and see what we set up at those times if we're going to pull back. But until we see some of these sectors, it's very tough trade. Probably don't have to sell anybody that's tried to short the Aussie. They've been in a lot of trouble there. And you can see right here with the Nasdaq, same thing up here, way up here in the freaking stars. I have up in here, you see there, it's 97.17. Look at this. I mean, this just thing keeps pushing higher. Right there, 97.17. That is just nuts. We're just a spit away from all-time highs in the Nasdaq. In here in the YM. Look at that. So there's just no let up. They're just, they're just running over people. And that's why, like I said, well, look, got to a point where I just didn't even feel like even trading it. And, I said, you know what? Let me look at some other areas. Where can I find some clues as to what potentially going on while I still driving in those sectors? At least if nothing else, they've kept me from saying, okay, now let me try short it again, which was later in the day, not very, very late, but later in the day when the actual indices were, all of them they had the potential to really break down. And they were all pulling back. I'm like, okay, this is it. We may just slide, but you weren't seeing it in the sectors, in those key sectors, indexes for those sectors. So we're going to move into the news. So the Aussie and New Zealand dollars extend breakneck rally on recovery progress. Australia and New Zealand dollars on Wednesday extended a rally that has delivered gains of 3 to 4% in just 3 sessions as progress on opening economies across the globe boosted risk assets. The Aussie added another 0.6 to 69.36, having its highest since early January at 69.82. It has now climbed 4.4% in just 3 sessions as breaks of the 200-day moving average at 66.60 and major chart resistance around 66.85 triggered a wave of short covering. Next targets are 70 cents. Kiwi jumped to 64.04 and was challenged at its March peak at 64.48. The shift to risk took a heavy toll on the yen as the Aussie shot to a 5-month peak at 75.74 Aussie yen. As a result, many economists were hastily revising their outlook for the Aussie. With the world economy in the early stages of a long recovery led by Chinese fiscal stimulus, the prospects for the commodity currencies such as Aussie have brightened, said Joseph Capurso. We expect Aussie dollar to exceed its pre-coronavirus level of 70 cents before the end of 2020 and lift to the mid-70s in 2021. Wow, remember how they were talking about 50 cents. The gains came even as data showed that the Australian economy shrank 0.3 in the March quarter, the first fall since early 2011, and just a prelude to a huge drop this quarter as whole sectors shut down to fight the coronavirus. The decline all but certainly ends the country's 3-decade run without a recession, but the downturn still looks mild compared to what many other developed nations are facing. Weekly data on card spending, consumer sentiment, travel, and the like suggesting activity has since rebounded as success in containing the virus allows much of the economy to reopen. After its monthly pricing meeting on Tuesday, the RBA said the downturn might not be as deep as that had been feared, covering speculation it might have to move to negative interest rates. The dollar loses out as hopes of economic recovery spread. The dollar fell against most currencies on Wednesday as prospects of more government stimulus and a global economic recovery emboldened investors to step up holdings of riskier assets. The Australian dollar surged to a 5-month high against the dollar as funds headed toward economies that are seen to be recovering the fastest from the coronavirus pandemic. The euro rose to the highest in almost 3 months on hopes that policymakers will support the Eurozone's weakened economies and with debt purchases to keep yields low. The greenback also fell against the British pound, the yen, and the Swiss franc as investors pondered mass protests against racism spread across the United States. The dollar is generally weak, said Yukio Ishizuki. The Aussie dollar has a lot more room to run because there's still a lot of shorts that need to be covered. The economy recovery story is the main factor. The Aussie dollar surged more than 1%. The Aussie pared back its gains as it traded to 69.37, showing the Australian economy contracted as expected in the first quarter. The country's treasurer said it's also already in recession, but traders said sentiment has turned bullish because of the lockdown restrictions are easing. Across the Tasman Sea, the New Zealand dollar rose to 64.30. The greenback also slumped to a 1-month low against the pound at 26.15. The ECB is expected to increase its $750 billion euro bond buying program. The pandemic emergency purchase program, when it meets on Thursday, probably by around $500 billion. The ECB scooped up all of Italy's new debt in April and may merely manage to keep borrowing costs for the indebted virus-stricken country from rising, data showed on Tuesday. The greenback grinded lower against the safe haven currencies due to concern about the widening economic impact of protests in the United States. That is one thing I said since the beginning of the week, and I thought I really pounded the table on that I thought we would see people leaving the dollar. It just doesn't make any sense, with these protests. And I think the currencies, and to a certain extent, if there's going to be a fly in the ointment, when and if we do make a turn in equities, if you see a more sustained pull down, then I think you're going to have people saying, "Oh well, foreigners are moving the money out of the U.S. markets because they can go into more stable markets, i.e., be any of the European stocks. They got the the help of the ECB, and on top of that, they don't have to factor any kind of social unrest. The good thing for them is at least the stock market has recovered, but they're losing it in the currency translation. So it makes sense for them to move money out. So you could see this thing start to, when it does turn, if we do turn and we do start to see it move lower, when they try and bounce back, you may see the bounce back even weaker and turn lower, and you'll see this attributed to that. It won't be at the beginning, but you will see that attributed. The U.S. Department of Defense has moved about 1,600 U.S. troops into Washington, D.C. region, the Pentagon said on Tuesday after several nights of violent protests. Trump threatened to use the military to quell spreading protests against racism and police brutality, but U.S. stocks continue to rally, leaving some currency traders confused about the market's direction. So with that, we'll move into the analysis. Looks like we are forming a little bit of a shooting star right now in the Aussie. We'll move on to the euro. So the euro continues to press against the resistance level of 1171, unwillingly to pare back. Resistance on Wednesday will be 1209. Holy smokes, we've made it up here. 1227. Will be 1209 with the support at 1115. Well, you can see here we made it up here to almost to 1231, so we'll have to revise that because look, we've continued to add on. But remember, we talked about these data figures that we came on at the beginning of the show. We'll show those again, and you can see across the board they're pretty much all better. Starting with the Spanish services PMI, pretty much they're all better all the way across the board. You can't really even find one number that was really, you can say, oh well, that performed more poorly. So these were all better than expected numbers. So certainly it has added to that already solid run, and really just goes along with this whole thinking of this exodus of the dollar. So we'll go with the 1231 because that is a technical level, and you can see that pretty clean as a whistle in here. See here, high and a fade back. You can see here a good battle zone in here. On the way back, we break through it, and then because they try and challenge again, they fall back. So that's pretty key. I didn't think we'd make it all the way up there, so we have to acknowledge that. So it's going to be 1231. Still pretty strong. We're above 112 right now. Support in the meantime. We can go here. I mean, I'm going to go right across here. You see these touches right here, right there. That's going to be 1132. Let's go into the cable. So cable achieved a solid close above 25. The next challenge will be the weekly level of 2602, which it looks like they got there, with resistance at 2630. Support will be 2042. So they made it up to this 2602. They're stalling. They just took it out by, it looks like a couple of pips or so. And if we do get a pair back, it's going to be right there. And we did put on here 2482. 2482. That's a key weekly level of 2602, and you can see here. So let me see the market finally take a pause from this area. But look, that 2602 is just huge. Look at that. Well, maybe a bit of a respite from here. Let's go move into the Aussie dollar. The Aussie trade, the Aussie is on absolute fire, blowing shorts out of the proverbial water. Resistance will be 69.75, followed by 70.29. That's that big level up in here. Support will be 68.56. But you can see where they finally looks like they're taking a pause against the 69.75. They got up a little bit above it. Looks like maybe about 69.83 or 82 or something, but 69.75. And support's going to be 68.56. And let's go move into the Kiwi. So the Kiwi, like its cousin, is taking no prisoners. Resistance will be 64.29 with support at 63.11. 64.29. They got to 64.32. So 64.29. He's been some monster moves. And support at 63.11. And the dollar CAD has slid through the basement. Support for Wednesday will be 34.65 with resistance at 35.46. And the low so far has been, it's like, 34.80-ish, 82. It's going to be 34.65. And resistance will be 35.46. And on into the peso. So the dollar peso fell under pressure of wholesale dollar selling. Key support level of 21.54 comes in vogue on Wednesday. Resistance will be 21.90. So this continues to remain weak. So 21.54. $21.90. And the dollar yen. So dollar yen broke through the 80-cent level, or 80, 108, I should say, with solid buying. The next challenge is going to be 896 with support at 811. So far we've made up to 884. So it's going to be 896. And the cash dollar index. Cash dollar index broke to new lows as an exodus from the dollar continues. The pair recovered but remains vulnerable. Support will be 97.29. So far the low's been 97. Oh wow, no, that was a low, 97.29. Was resistance at 97.89. So, and the high 97.89. And on to the cross rates. And this Kiwi continues to surge. You can see right here at 69.74. Unbelievable. Unbelievable. Wow. But that's going to be resistance just going with the technical level, 69.74. Just destroying everyone in their wake. Obviously key level right there. At least on the first blush on the way down. And we'll just drop it just to that low there, which is 68.86. So 68.86. Next one is the Euro Yen. Oh, look at this monster. Wow. You can see right here, the wick here and the body there, that's going to be resistance, which is going to be 22.24. And right here, there, that will be support, which is going to be 21.35. Next one would be the Euro odd. And we have really dipped lower. We're actually seeing a pullback as a hammer as the odd has come off of those highs. Made all the way down to 60.32. Support's going to be right there at that level, which is going to be 60.91 at this point. 60.91. And resistance will be that level right here, which is going to be 62.97. And onto the Euro Kiwi. We went right to that technical level there. You see that right there? Right there. There's going to be support at this point. 74.68, kind of like a number you can use as it would if as a risk level. 74.68. And you can see the resistance clears a bell, 75.66. And onto the ASEAN. And just going with the levels right here, you can see that coming across. Look at all that volume. A little bit of a fight there. And that comes in at 75.49. Boy, this thing's had a pretty fabulous run itself. And support is going to be right there, that body touch, which is a close. Looking for the pair on the pullback, where we would find that be 74.34. Next would be the guppy. Came right up to this level at 37.14. And that's resistance. Let's go to the intraday to see for support. This level right there. 35.83. So if we do see that pullback, 35.83. And on to the sterling dollar. Well, you can see the key support right there, 80.89. You can see that significance right here. And resistance, let's go into the 2 hour for resistance. Right there. Look at these wicks and that close. Let's go right there. 82.94. And that's going to do it for the FX. Euro kind of turn out just a little bit here. Looking at gold, you continue to move lower. That's 1734. They tried to defend it. Look how they're holding it yesterday. I posted this in the chat room, and they were defending this 730. Well, actually, it was on the way down. They defended it, and they broke below it, hitting some stops. It came right back up again, and here we go sliding again. Obviously, this has a lot to do with equity still pushing higher here. Oh my goodness! So look at crude oil. And the thing with this market, it just yeah, we're seeing this right now in equities, but I mean it's we're seeing it in equities as of late, and it's been frustrating. It's kind of like one way, but this is what crude does. It just that's one of the things I don't like about trading crude is that, look at that, and I haven't traded in a while, in some long time, but look at this. I mean, you just don't even have a way to even. It's not like as if you can say, okay, well then I'll manage the position. No, it'll just run over you and go over you and go for it's the saying goes go for days. Well, not necessarily go for days, but I mean you can see how this market. Look at this. Once it just gets going, there's just no let up. You see, man. Look at this. Okay, we run up here. Okay, consolidate a dip, a run. Okay, well here this is a good area to short. Okay, or come in, step in. You dip just very low, and look at that. Okay, well, they just got a little bit overdone. Here, we're going to pause here and just further and further. And I mean, there's always going to be a news catalyst, that on either way. But look at this. You see these moves? And I mean, at least with the equities, you can say, oh, wow, this has been going on since towards right at the end of May or something. Yes, the move has been prolonged, but I'm just saying is you'd get some back and forth, and you just don't even see that. Look at this in crude. Look at this. Once you got above, $26, look at that. Basically, just a straight move all the way for nearly $6 to 33. We paired back by what? $1, and we just kind of languish there. We run up there, pull back, make another run back up. Now here we go, starting the whole thing all over again. I mean, it's just a market that I don't really care much to trade because of. I mean, obviously, there's a lot of circumstances going on. Ever since everything's changed after the debacle they saw, and you've seen these old markets recover. But then, of course, you had the Russians playing games. Yes, we want to agree, but no, we don't want to agree after a while. Yes, we'll agree to 1 month with the cuts, but not anything further. And the market's you're basically being held prisoner to these headlines. Of course, like I said, gold is weaker because of the continued up move in equities. So it's made it vulnerable. But that's all we have for today. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.